Hi friends, in this video we are going to see what is meant by a coffee can investment strategy. Coffee can investing approach refers to buy and forget to investing in shares of a company. The concept of coffee can investing has originated from US markets where it is highly successful. The story behind the coffee can portfolio traces back to American Old West. Back then, people would secure their valuables by putting them in a coffee can. Was then placed under a mattress for safekeeping, where it stayed for years or even decades. An investment manager by the name Robert Kirby proposed in 1984 that investors could follow the same investing strategy. They identify a diversified portfolio of consistently performing companies, investing in these stocks, and keep invested for at least 10 years. Unlike other investments, coffee can portfolio is invested in a lump sum. Investing in lump sum would benefit investors with large amount of money, doing this once a year. For example, employers can do lump sum investment using their bonus amounts. If someone has made a huge profits in say real estate or some other business profits, they can do that lump sum investments. Frameworks for choosing a coffee can portfolio. Choose companies that are market leaders. Build a portfolio for 10 to 15 companies and intent. Choose companies that have excellent growth track records of over a decade. Don't focus on one type of stock, keep it diversified. Coffee can portfolio is certainly one of the best type of investment provided you invest in the right stocks for long term and enjoy the benefit of compounding. And to make your journey easier to choose the right stocks in your coffee can portfolio, we are here providing some examples. Dollar Investment Limited is engaged in the trading of shares, securities and commodities through various stock exchanges. The company is expected to give good returns. The company has delivered good profit growth of 117% CAGR over the last 5 years. The company has good return on equity for the last 3 years. Britannia Industry. It is one of the India's leading food companies with over 100 legacy and annual revenues in excess of 9,000 crore. Britannia is amongst the most trusted food brands and manufactures India's favorite brand like Good Day, Tiger, NutriChoice, Milk Bikis and Marigold, which are household names in India. Britannia product portfolio include biscuits, breads, cakes, rusk and dairy products including cheese, beverages, milk and yogurt. The company has a good return on equity, maintaining healthy dividend payout. Havells India Limited is a leading fast-moving electrical goods company and a major power distribution equipment manufacturer with a strong global presence. It enjoys market dominance across a wide spectrum of products including industrial and domestic circuit protection devices, cables and wires, motors, fans, modular switches, home appliances, air conditioners and so on. Here are some of the disadvantages of coffee can portfolio. While investing, you need to monitor your portfolio on a periodical basis to ensure that your portfolio is well placed within time. For that, along with the stock, you need to track political, economic and regulatory changes that have an impact on the holdings. Success depends on stock selection criteria. If the stocks are not researched properly, the strategy can lead to wealth destruction. New companies entering the market and replacing the old companies can affect the performance of the portfolio. You will be able to judge the portfolio only after 10 years. Thank you for watching the video.